Performance of Nigeria's stock market amid economic challenges serves as a reflection of broader socio-economic dynamics at play within the nation. According to experts, this mirrors not only investors' confidence but also government policies, corporate governance practices, and regulatory effectiveness. Yesterday, the NGX market cap witnessed a significant increase, soaring by an impressive 1.85 trillion naira to settle at 55.89 trillion naira, while all share index crossed 98,000 mark. Let's get talking more about this. And I'm being joined live again in the studio, the Managing Director of Ankoria Investments and Securities Limited, Mr. Lucky Jeba. Mr. Lucky, thank you so much. It's good to see you.
It's a pleasure.
Thank you for coming on the program. You know, like I said off camera, that we're talking about what Transcorp did to the market yesterday. But in your thoughts, what's the entire performance of the market in recent times? Nigerian for now, what do you make of it?
Well, we're beginning to see the Nigerian economy being reflected in the market. You see the power sector, which it contributes significantly to the economy and GDP being reflected. We have Girigu listed. We see Transcorp coming into play. And you see, what you see, the performance of the market in the first quarter showed the resilience of the Nigerian economy. For example, if you see Transcorp itself, look at the performance so far this year. And the market so far this year have returned over the year-to-date performance for the market over 30%, which is quite above the inflation rate. So any investor that invests in the market so far, technically you have beat inflation, you preserve value for your investment. So that is what reflecting in the market.
Beautiful stuff. But let's look at the performance in relation to the 2023 financials. Have you seen that was released, I think, on Friday? What is your reaction to the performance with that report?
Yes, we see investors being bearish about the performance. We see some of the multinationals and bellwether stock like Nestle, MTN posting loss. But I would tell investors that this stock still commands value. Like based on our outlook we have with our investors, we told them that this is the time to buy this stock. For example, now we just need to understand accounting standard with respect to reporting. Now, under accounting standard reporting template, you have to mark to market your financial liabilities. Or rather, on the other hand, your real asset, you don't mark them to market. So if you place those assets, like the fixed asset of this company, and use replacement cost to value them, you will discover that these companies, the shareholders fund is not negative. The economic value is not negative. So shareholders here, these companies hold huge positive economic value for investor. For example, look at the industrial complex of Nestle, for example. If you want to replace that cost, those infrastructure, it will double, twice the amount, more than double the amount they are current in their books. But because of accounting standard, they cannot mark those assets to market, but their liabilities they will mark to market. So that is what is you are seeing the company posting negative shareholders fund as a result of the FX devaluation. But I tell you, this company holds significant value. If you extract further, look at their EBITDA ratio. This company has sound EBITDA margin. So I would tell investors, it's a time to take position in these stocks because what happens is just a one-off event.
Brilliant stuff. But when in looking ahead of 2024 market pricing of securities against the backdrop of rising inflation and of course interest rates, you saw what happened at the MPC meeting, the first that we've had in after many months, and about 400 basis points is what we've seen. And how will all of this affect market activities?
Well, I think that the hike in the MPRO is just a temporary measure by the Monetary Authority. The President Tinubu-led administration is an administration that focused on growth, and you cannot at the same time pursue growth and want to pursue a tightening policy. So I think it's just a temporary measure to bring the inflation to some comfortable margin, comfortable levels. Beside that, too, the equities market, some sector of the markets are technically hedged against inflation, while some are not hedged against inflation. So, for instance, companies that are producing commodities that are indexed to the US dollar, the price in the international market, those companies are technically hedged against inflation for investor. For instance, take Presco and Okomo, palm oil, their final output, their price in international market. So even if they didn't increase their production, by the time the price of their output in Naira will go up, which will reflect in their revenue. So if you're buying making investments in such companies, technically you're buying like a dollar asset and pay in Naira. Likewise for the companies that are listed on the market in the upstream sector. Yes. The crude oil is priced in dollar. And even if it's a technical hedge for investors. So another thing investors should watch out for, to look out for companies that are not significantly exposed to FX funding, and companies that basically source their raw materials locally too. Some of these companies are kind of immune from the valuation. If we're reviewing the result of a NASCON industry, good results, because their exposure to exchange rate is very limited. So they post good numbers. But beside the exchange rate, which the huge losses that were posted by corporate is just as a result of the harmonization of the exchange rate, which we think is a one-off. And look at all these companies, they are posting good growth in terms of the revenue.
Well, many are saying that is the way to go. Staying a bit around those policy issues now, because you are the expert here. Many say that's the way to go. Before President Bola Tinubu embarked on this unification of rates and all of that, I've had analysts on this side telling me that was the way to go. We need to open up the market. We need to remove fuel subsidy. But after removal, everyone now comes up with, we need to also do so. But regards to how it affects the market, do you think that is really the way to go to help people, business people repatriate funds and all of that?
Well, you must price your currency competitively.
Good.
And find people are complaining, the citizens are complaining about the fall in the value of the Naira. But if you look at the positive side of it, there are news that neighboring countries in the West African sub-region, they are coming to the northern part of Nigeria to come and buy food, because as a result of the devaluation of the currency, our products are cheaper, meaning they are more competitive. So the positive side of it is that the subnationals of the northern region corridor, they can make more investment, boost agriculture, create more revenue. So the valuation is not all bad in the sense, if you are producing. And it is one of the positive effects we are saying that you see many of the countries in the West African corridor hitting Nigerian agricultural commodity. So what I think Nigeria should do, it makes agricultural commodity more competitive within the West African sub-region.
Okay.
So we should grow, we should increase production.
True.
And we'll earn more revenue. So those are positive side, you see. So most of the time, when you are a producing country, it's even better your currency to be cheaper, because it makes your products more competitive in international markets. And it's one of the positive side we are seeing within the West African sub-region. So if we can drive production, we're going to reap the benefits of it.
That's true. Because when we produce, we sell, we would. Yeah, I totally agree with you. Let's not talk about the moving money to the fixed income space. We don't talk much around that now. Many people think equities is the way to go. But I want to ask you, what's your understanding of happenings in that side of the market? Any opportunities there?
Well, there are opportunities. Every policy brings out opportunities and threats. Now, inflation is not generally good for fixed income, because once inflation is somehow priced into your interest rates, and once interest rates start going up, price of bonds, fixed income security comes down, fall. But the sensitivity of different segments, different maturities to interest rate movement differs. So what I tell people at this time, even you want to play within the fixed income space, you can look at the short end of the curve, short maturity space, because they are not quite sensitive to interest rate movement like the middle part of the curve and the long end of the curve.
So, but this rising interest rate, a little back to it again, many say this cannot help wealth creation, because when you can't borrow, how do you do businesses? Do you also think that can impact negatively in any form?
Yes. When it comes to policy formulation, you have to be a compromise because they are for example, you need price stability for economy to grow.
Yes.
You need lower interest rate environment to finance the economy. So I think the authorities are looking at a compromise whereby, okay, can we bring inflation to some manageable level before we can now look at pursuing growth, because we are aware of what is happening because of the inflation, hunger, hardship in the land. So if you want to pursue growth, people have to be alive to benefit from the growth. So first of all, trying to bring the inflation to a manageable level by hiking interest rates on the short term. If you look at the movement, the increase in rate, it's basically try to manage the short end of the curve, not the long end of the curve. So it shows that they're trying to see how they can manage inflation in the short term. Then probably after going to some comfortable region, then we'll focus more on growth.
Let's talk about let's go to the global scene now. We've seen a lot of disruptions. Look at what is happening. Ukraine-Russian war is still there. We've seen all that is happening and how this is affecting inflow of funds and all of that. In the global space, what is your understanding of performance of markets despite all of these challenges? The United Kingdom, I think they're still in a recession. So all of this, what is your understanding of the performance of the markets across the globe?
Well, for the market is quite challenging. We have seen the developed economies jack up rate astronomically last year, even into. So what they're doing, they are trying to see the impact of the sanction on Russia. Russia is a key player in the global economy, being that they're a major player in the energy chain, and energy is a major input in production. So beside energy and agriculture, they are still a major player within the agriculture, the food chain, via fertilizers, grains, and the rest. Likewise, Ukraine too. So once you disrupt the global supply chain of these two major commodities, food and energy, then you should expect some level of inflation. So it's in a bid to counteract that inflation, the monetary authority jack up interest rate in America and the Eurozone, and even Japan. Now, there have been the struggle to see how they can replace the Russian energy, but it's a bit challenging. It's a bit challenging for everybody to replace Russia. Beside energy too, then other precious metals, commodities.
Yeah.
You
need gold is down.
Yes. You need an industrial production process.
Yeah.
So it's really challenging, but it's not entirely bad for the entire market. Last year, fixed income market performed poorly because of the hiking rates.
Yeah.
But for the equity market, like I said, there are sectors within the market that hedge against inflation, while there are other sectors too. When rates goes up to, they suffer too. When inflation is up to, they suffer. For example, we have defensive sector like the food sector. Then we have commodity sector that hedge against inflation. So if you look within that range, if you look at the major international companies, they were declaring bumper profits.
Despite all of these challenges.
So the key is to know where to be at the right time.
You are the operator. So when you advise it now, how do you advise clients at these very delicate times? How do you say, okay, where can I put my money? If I have some amount of money, what would you advise at this time, considering these challenges we've identified?
Okay, for now, I still want to, globally, generally, I will say, okay, look at the commodity-based sector, gain exposure to commodity, either companies that produce commodity, food, agricultural commodity, energy, precious metal. Then locally, on the local side, more specific, we look at what's happening in our market. You see some companies reporting heavy losses, wiping shareholders' fund. there is a tendency for people to misinterpret the numbers. There's no between accounting values and economic value. So I would tell you that MTN still represents huge economic value. Nestle, Nigerian breweries, that the brewing sector, they still represent huge economic value. So I will want to, because first of all, what are the events happening? Look at what are the catalysts that drive these events. Are they recurring catalysts, or they're one-off? For example, we do not expect a movement of our FX in a single year by 50%, 100%. So those are likely one-off events. So I will tell them, buy value, take positions. MTN is there, Nestle is there, Nigerian Brew is there. This company represents huge values.
Now, intra-African listings are poor across the African markets. And I want to just ask, how do you think we can improve, this intra-African trading? Maybe it could help create wealth for Africans.
Yes, in our elementary economy, they taught us about circular flow of income. when income flows among group of people, more frequently, increase the velocity of flow of income, it leads to wealth creation. So think making trades to happen within Africa will create wealth and lift the continent out of poverty. So we need to try to see how we can formulate policy to reduce the barriers. And a big issue is issue of currency, multiple currency within the sub-Saharan
the continent.
Yes, sub-Saharan Africa.
True.
And with the hike in interest rates in the Eurozone, you see almost all the countries in sub-Saharan Africa, they are having challenges with getting FX. So if we could have a kind of a common standard, a currency that will be a benchmark for Africa within the sub-region, we can use to trade, it will remove all the barriers. For example, if I want to trade with a merchant in Ghana, I'll first go and look for dollar. Whereas the American system does not contribute any to this, does not create any value added in this process. But they will benefit. It will place a demand on the US dollar. If I want to buy cocoa from Ivory Coast, I'll first go and look for dollar from Nigeria to pay the cocoa farmer. So I think I would like to call upon a Pan-African multilateral financial institution, development financial institution, to look at this to create a more reliable payment infrastructure that can drive trade, because at the center of trade is payments, is payment system.
Okay, I'm just seeing this news in, though we'll also confirm that Binance is leaving Nigeria, suspending all Naira services. These are big stories in. We also see Bank of Ghana suspends FX trading licenses for some banks. If this happens, let's talk about the suspending of FX trading license. What do you think, what impact would that have if that is happening in Ghana? You just talked something about Ghana now, my mind just went to this.
Well, suspending your FX trading license, well, first of all, you have to look at the reason that led to the decision.
Yes.
If the reason is to bring sanity to the market, good. If it's arbitrary, then it's a minus. It's a minus for the country, and it's a minus for the sub-region. So I don't have those reasons at my fingertips.
All right, let's look at the outlook now for the entire market, global, domestic. Despite all of this, you still see optimistic views. Everyone is saying, no, there's going to be light at the end of the tunnel. Things will get better and all of that. So what do you think? What is your own outlook? What is Korea thinking? Maybe you've done your outlook, I'm sure. So what are your projections? What are you considering giving us these projections that you have? What have you put in place to get this?
Well, our outlook for the market is still positive.
Great.
We'll begin to see, we've had cases of multilaterals, multinational organizations, companies leaving Nigeria. I think they create opportunity for local players. If you look basically...
They're active.
Yeah, it creates opportunity for local players. If you see, I think some of, not too long, this company...
Which is a cement?
Not a cement company. Okay, take for example, PZ.
Okay.
Is a local pharmaceutical player.
All right.
And as more of this multinational exits the system, it creates more opportunity for them to expand. You see, Pitsin has been doing very, very well. Basically, because the structure of the multinationals is another thing Nigerian regulators need to examine very well. A typical multinational company sources all its raw material from a subsidiary abroad, even if they have local alternative here. They don't develop the local economy. They don't invest in backward integration. So what you see is as the naira becomes cheaper, that the raw materials they are sourcing become more expensive. It becomes difficult for them to compete with a local manufacturer that source some raw materials locally. So it's not, the local manufacturer is not exposed to the FX challenge, but he's exposed to the FX challenge. So those are some of the factors that is really driving a multinational. But multinationals that believes in Nigeria, they should invest in backward integration. For example, a key ingredient in manufacturing of drugs is starch.
Yeah.
Why are they sourcing that starch from abroad?
Valid point.
We have cassava here. We have yam here. These are source of starch. They should invest in backward integration, source that starch here. Some of this challenge you're having with respect to FX will not be there. I just make, for example, look at the financials of NASCON industry. Little FX exposure because bulk of the materials are sourced locally.
Very interesting conversation, I must say, I've been having with the Managing Director of Ankoria Investments and Securities Limited there, making sense of market activities, both local and abroad. I must thank you so much for your time on the program. I will hope to have you join us again soon to look at issues, of course.
Yeah, it's a pleasure.
All right, I must thank you. Let me get a handshake. Thank you so much, Mr. Lucky Jeba, there live for you there from Business Nigeria. Thank you, and do enjoy the rest of your day.
It's a pleasure, sir.
All right.